let's say we hear people say all the time, whether it's gonna be true or not, whether you believe it's true or not, this can be completely subjective,
Mm,
that gold is safe. And crypto, some people will say, there are a lot of proponents who
mm,
will say crypto is safe, crypto is the future, especially if you're talking Bitcoin, Ethereum.
mm,
But there's a lot of people out there who say that no, it doesn't really hold the value that
mm.
it's worth, and invest in gold and have diversified investments. But of course, gold is a great one. So what would you say to somebody who has this viewpoint on kind of, the physical, tangible, the gold, or even the investments, the stocks, the ETFs, the
Mhm.
bonds, are what you need to be investing in, but maybe not quite so technologically advanced, or just not understanding the technology that digital assets and blockchain and decentralization can bring?
Yeah. Well, that's kind of a bit of a can of worms of multiple multiple sub themes, I guess. So we'll try and maybe touch on at least a couple of them in the time we have. But so yeah, there are a couple of areas. I mean, firstly, kind of alluding back to some things I was saying earlier. I'm not here to tell anyone do this, don't do that, from or to say this asset class is good and this asset class is bad. Overall, really, diversification and proper risk management have been, key markers of success. And that means not just diversifying within a specific asset class, but also diversifying across asset classes. So, let's say someone who, if you're talking precious metals, that could mean, having a bit of a position in gold as well as silver, maybe, some platinum, etc. Right? Or it could also mean in a gold or in a precious metals type of situation, having, let's say some of this stored at home, but some of this stored in a vault in one country and others stored in a vault in another country. So just in general, diversification and proper management and proper risk mitigation, both in a specific asset class and across asset classes, is I think just really important. Tying into that, a lot of kind of let's say mainstream institutional analysts, a lot of the news lately have been seeing articles about this in Wall Street Journal, various other places, are starting to indicate that people are increasingly very, let's say, uneasy with a traditional kind of stocks bonds allocation as something that's going to breed success automatically. I think this is the case for a number of different reasons, but for one thing, the level of value that the stock market has been able to capture from a like IPO onwards sort of a basis has on average gone down, where a lot more growth has been happening pre-IPO compared to in past decades. And so just the ability for also in this current market, a lot of the stock market has been acting in kind of a very tight correlation with itself, where there have been a lot of assets that have just been having the exact same behaviors. So overall, I think that a lot of sophisticated investors are starting to realize that having a bit of an allocation into various alternative assets, which can include things like precious metals as well as digital assets, and maybe also fine art or various others, that this can provide a hedge against volatility in the market. Relatedly, when you're specifically talking about an emerging asset class like digital assets, where it has only been around for a little bit of time, the value of something like that specifically is that is the asymmetric upside, where if, for example, for easy maths, if you have $100 million in a bank account, or like $100 million net worth, if you were to say put 5% of that, $5 million into emerging asset classes such as the digital asset class, the level of growth potential of that is astronomical, whereas the level of downside is fairly minimum. Where even if it went to zero, which, looking at analysts from, various investment banks and hedge funds, et cetera, is very unlikely. But even if it went to zero, you would still have, most of the rest of your wealth allocated into more traditional asset classes. But if it does continue on anywhere near the level of growth trajectory that it has shown for the last 10 plus years, you could be seeing a scenario where you're getting that overall net worth much, much, much bigger. So that's another way of thinking about it. Yeah, and I mean, back to that, the risks needing to be managed. Lastly, on that topic, thinking through what that looks like. There's been a big trend in the space for proper custody of these assets, where firstly having audits in place is really big. Where if a lot of these organizations that kind of fell into hot water over the last year or two in the digital asset space, if they'd had limits on the amount of leverage they could use, or if they had really routine, top-notch third-party audits in place from the get-go, they would not have, we would not have been in the same type of, let's say, negative sentiment around digital assets that we are right now. So thinking through that, really big areas in the space to be watching out for many players are making sure that the risk in the form of fridge, especially, is minimized. Also, that there's transparency on audit information, and that there's also clear systems in place for things like succession management of what happens to someone's crypto if, let's say, what happens to your crypto if you pass away? How does your family get access to that? Or if a team, let's say if one team member is not available, how do you have systems in place where other team members can make urgent decisions in such a way that doesn't open up other vulnerabilities? So these are patterns to think about, as well as questions to address from an overall level.